This is CGTN, China Global Television Network.
Hello there and welcome to Global Business Africa. We'll be giving you insight into Africa's business and financial markets. I'm Uche Okoronkwo, coming to you from Kenya's capital, Nairobi. Let's start with a look at the markets. Emerging markets stocks racked up more losses today, with MSCI's index of EM equities falling nearly 3%, touching its lowest since 2016. Now, so far, that index has lost almost 14% this week, placing it on a course for its worst week since 2008. Meanwhile, South Africa's JSE also seeing further losses today as investors continue to sell off riskier assets. Market heavyweight Naspers continues to see weakness as its parent firm Tencent fell further today. Egypt, on the other hand, was the only green spot today, climbing 5%, but traders say that may be just a temporary upward correction so far. Now, also coming up on today's show, South Africa's Reserve Bank cuts interest rates and dramatically revises economic projections for 2020. Tanzanians are urged to embrace cashless transactions to beat the coronavirus spread. And Asian markets remain in the red as the impact of COVID-19 continues. Well, let's kick off today's show in South Africa, where the country's Reserve Bank has cut interest rates by 100 basis points. Along with that cut, which now brings the repo rate to 5.25%, the bank also cut its growth and inflation forecasts. Now, the Monetary Policy Committee decided to ease policy even after a recent sell-off in markets. The drop has pushed the rand to new lows of worse than 17 rand per dollar and 10-year bond yields to double digits. It now joins its peers in several nations who have injected various forms of monetary policy support into their economies in recent weeks. These include the European Central Bank and the U.S. Federal Reserve. The measures have been taken as the coronavirus continues to stalk its way around the globe, raising fears of a worldwide recession.
Heightened risk sentiment in global markets has amplified domestic and fiscal risks. This has pushed South Africa's sovereign bond yields sharply higher and weakened the domestic currency, increasing risks to monetary policy. The steep drop in global real interest rates implemented by advanced economies in recent days has partly offset those risks. Despite the general rise in risk, the significantly lower forecast for headline inflation has created space for monetary policy to respond to the rapid deterioration in economic conditions.
Well, let's take apart today's decision further with CGTN Sumitra Naidu. She joins us now in Johannesburg. Sumitra, always good to have you on the show. Now, today's decision comes as no surprise. We sort of all expected a rate cut from the Reserve Bank today. Now, the question is, will this be enough to provide relief to South Africa's ailing economy? What was the rationale behind the MPC's decision today?
Hi, Uche. Well, this certainly was an aggressive cut by the Reserve Bank. I don't think we've seen such a drastic move, a 100 basis point cut by the bank before. But it's really because the situation is so dire. The South African economy is spiraling to levels also not seen before, at least since democracy. We are already in a recession. We recorded just 0.2% growth in 2019, and no growth is expected this year. In fact, the Reserve Bank has forecast a 0.2% contraction in the economy for 2020. Now, the governor noted the serious impacts of COVID-19, the massive impact it's having on business and overall economic activity, and not only here but across the globe. South Africa, being very much a global trader, is feeling the pain. But the situation did not happen in the last few weeks since the outbreak of the coronavirus. South Africa was already in trouble with declining growth and increasing debt. Eskom's debt issue has left the state-owned entity out of pocket and struggling to keep operational. The ongoing power cuts have had a massive impact on the economy, with so many industries and businesses being affected. So the governor said the decision to cut will help households and firms counter the impacts of the domestic challenges as well as COVID-19. He also said that the other central banks around the world had also cut rates, providing some room for us here in South Africa to cut. The United States cut to near 0%. The Bank of England also cut to 0.1%. Also, he noted that oil prices have declined significantly and the inflation outlook remains in check and will remain moderate in the longer term. Whether it's going to be enough to help fix the situation remains to be seen. Some economists believe this situation requires a lot more than just monetary policy.
Quite right, Sumitra. There is a lot of discussion about how effective a rate cut will be in terms of calming markets and supporting the economy and changing sentiment right now. Are there any other monetary policy measures the Reserve Bank said they will implement in order to help mitigate the economic consequences of this global pandemic?
So when you look at the Reserve Bank and what it can do, in terms of currency, the Reserve Bank can intervene to stop, for instance, in this case, the rand slide. The currency has lost 17.2% since the Reserve Bank's last MPC meeting in January. Having said that, the bank has always maintained that the currency is a free-floating market currency and it does not interfere with that. It has never done so in the past and it won't do that going forward. Whether this changes, considering that the situation is so dire, that also remains to be seen. The bank can also look at pumping some liquidity into the market, looking at some sort of quantitative easing. It's another measure that it, can be done by the Reserve Bank, but it has said in the past that it prefers not to do this. Again, this may, the governor said today that, there are discussions going forward, and we have heard that there are some discussions with the Treasury. We're not too sure whether this may come in the next few weeks. But the governor did note today that monetary policy cannot on its own improve the potential growth rate of this economy or reduce fiscal risks. Lesesha Kganyako said this, several times before, and he's also again urged government to urgently address structural reforms to address the decline of the economy. He reiterated that today. So even though there are other measures that the central bank can take to assist rates, rates is as the Reserve Bank. It depends on whether they're actually going to take that kind of action going forward. Right now, they haven't done anything to that effect. But apparently, there are some discussions, as I said, happening behind closed doors regarding a further response to this economic crisis. We may hear about that in the next few weeks.
Now, as you alluded to, we have seen a sizable sell-off across South Africa's markets in the last 2 weeks. So how have we seen markets react to today's decision so far?
So, there was some expectation that it would have helped today. Usually the banks react well to interest rate cuts because, it spurs a bit of spending. But we saw all of the big banks getting hammered on the JSE today. Capitec, one of the, more recent up-and-coming banks that's done really, really well over recent years. That was the worst performer on the day, crashing over 38% in just a few hours. We saw Nedbank dropping 26%, First Rand losing 21%, ABSA was down over 25%, Standard Bank also lost about 17% on the day. It was an absolute bloodbath in the financials index, but we saw losses across the board. We saw mostly the pharmaceuticals, those kind of stocks lifting, not enough to lift the overall market. The JSE All-Share Index extended losses today, closing almost 1.7% in the red. And, if you look at the JSE in the last 2 weeks, it's lost over 30% in value. The rand too continued its slide today. It was last trading at 17.41 against the dollar. As the Reserve Bank governor noted today, the rand has lost over 17% in the last 2 months. It's not looking good at all on the markets, and it doesn't look like the slide is going to stop anytime soon. Uche?
Well, as always, Sumitra, many thanks for your insight there. That's Sumitra Naidu joining us in Johannesburg. Well, let's stay in South Africa. Now, following the government's declaration of a national state of disaster in South Africa, and in the interest of public health, some businesses in the country have immediately adopted an approach, what they call, in quotes, doing business unusual. Sakelika, that's one of the largest businesses organizations in the country, is now leading that pack. The organization is already assisting other companies to adapt to the new way of doing business. CGTN's Yolisa Njamela has more.
The outbreak of the coronavirus has effectively disrupted many industries, and so it has become imperative that businesses adapt and change the way they usually conduct their business. Sakelika is one of the largest business organizations here in South Africa. It has more than 12,000 members. The organization's CEO, Pete Leroux, has taken it upon himself to help other businesses. He has hosted a complimentary COVID-19 webinar.
What we cannot afford is to have business harmed in the long run. So it has to be business unusual. Not your usual kind of solutions, but it means that we have to find ways to stay open while mitigating the risks of the spread of the disease.
Leroux advised businesses on how to endeavor to keep their doors open while doing their utmost best to limit the spread of COVID-19 as well as protect employees and society at large.
Those are the most important things that business can do, is to remain in business, to provide goods and services, to provide employment as best we can, and to anticipate the changes in demand, the changes in the short and the long run, and to prepare for that, just as we would for any other market change. From Sakelika's side, the most important things we will do is to support our members in this time and to bring them closer together, to find ways to ameliorate the effects, the short-term effects, and find ways to improve doing business with each other over the next few months, because this is a situation that will stay with us.
Economist Davy Roth says companies should be cognizant of the fact that when the coronavirus hit, South Africa's economy was already in the doldrums.
South African economy was experiencing a crisis before the virus. The South African economy was in a recession, and for the whole of the year I expected, before the virus, economic growth in the region of 0.5% or less. Remember also that there's a growth ceiling in South Africa. We just do not have enough electricity. That means that the economic growth in South Africa is limited to around about 1%. So the financial markets get two conflicting messages, stream of messages here. The one is, obviously there's an impact on the real economy. How bad is this going to be? And the good news is, obviously the authorities are putting some measures in place.
Sakelika is of the view that should businesses fail to deliver goods and services and the economy stagnates further, it would lead to further consequences, including higher rates of unemployment and other impacts on human well-being. Yolisa Njamela for CGTN in Centurion, South Africa.
Meanwhile, Egypt's government and its central bank have announced some new fiscal measures in order to relieve the market from the impact of COVID-19. Now, Cairo is cutting power prices for producers and delaying loan repayments and tax filings. Here's Adel El Marhoui with more.
It's the biggest relief package Egypt provides in recent years. The Central Bank of Egypt is pushing a $630 million relief package. The decision is expected to affect some 940,000 borrowers. The Financial Regulatory Authority is extending the deadline for submitting financial statements for 2019 for publicly traded companies. Deadlines for filling Q1 results and holding General Assembly meetings have also been extended. Meanwhile, the Finance Ministry is exempting private citizens from paying fees if they file taxes online. Deadlines for filling tax returns and payments for businesses and individuals has also been extended by up to 90 days. The government is also reducing energy prices for producers. Industries are also getting some tax cuts. There is good news too for the industrial and tourism sectors. They will not pay real estate tax for 3 months. They also now have the chance to repay existing real estate tax liabilities in monthly installments over the next 6 months. And the Trade Ministry is temporarily waiving a rule requiring letters from embassies to be produced before the custom clearances of imports and exports. The Egyptian stock exchange is also giving breaks. Taxes on transactions, capital gains and dividends will be cut, reduced or refinanced. Egypt is bracing for the impact COVID-19 is having on the country, which appears to be only getting started. Adel Mahroui, CGTN, Cairo.
Let's now take a look at today's corporate headlines. Private equity firm Afrikinvest has acquired a minority shareholding stake in I&M Bank Rwanda for an undisclosed amount. Now, the shares were paid through Afrikinvest Evergreen Investments, which is a special purpose vehicle formed by the private equity firm. I&M Bank Rwanda is a subsidiary of I&M Holdings and is listed on the Rwandan Stock Exchange. Apart from Rwanda, the holding also has operations in Kenya, Tanzania, and Mauritius. And Kenya's Cooperative Bank Group has posted a net profit of $136 million at the close of the financial year ending 31st December. Now, this is compared to $121 million recorded in 2018. The group's fees and commissions on loans to its vast customer base also rose from $5.4 million to $30.4 million. The net interest income increased to $298 million from $293 million. And South African retailer Massmart has decided to close all of its non-performing stores. Management says it will close trading at 23 Dion Wired stores on March 19 and will decide whether to cease trading at 11 mass cash stores. Now, the company said it will continue talks with labor unions on measures to mitigate job losses and look at moving affected workers into vacant roles in other stores where practical and reasonable. And in the wake of the coronavirus pandemic, Facebook will pay its third-party U.S. content moderators to work from home. Facebook's chief, Mark Zuckerberg, said the contract workers will still get their full salaries, even if they were unable to do all their normal tasks. He added that the social media giant's work-from-home policy would last until the public health response has been sufficient. And that is a look at our corporate headlines. Well, we are heading into a short break now, still to come. Tanzanians are urged to embrace cashless transactions to beat the coronavirus spread. And Nigeria is set to trim its budget by about $4 billion.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business. Only on CGTN.
Every story starts out like this.
Okay. We'll head up now.
But beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible? And why?
Let's get some reaction on ground. Joining us in Johannesburg is Sutra Naidoo.
Hello, Naro.
This is how all stories begin. See how they end. Only on Global Business.
Welcome back. Now, the Bank of Tanzania has issued a statement encouraging citizens to use digital payments to comply with the anti-coronavirus guidelines. The central bank also said that its banknotes are manufactured in a way that does not allow the virus to dwell on it. It has, however, advised the public to follow the guidelines issued by health authorities. This comes after the Tanzania Bankers Association held its meeting on Wednesday to discuss actions that may be taken by the banks in the face of the COVID-19 outbreak. Tanzania's health ministry announced that 2 more people have tested positive for the coronavirus, bringing the number of cases in the country to 6. Well, as Tanzania confirms 2 more cases today, let's find out what measures are being put in place. We're joined by CGTN's Daniel Kijo in Dar es Salaam. Daniel, great to have you on the show. Now, as we just mentioned, Bank of Tanzania issuing a statement today encouraging the use of digital payments. What more measures will we see them implementing? Will there be any economic measures to support citizens during this tough time?
Hi, Uche. Yes, indeed, the central bank is pushing people to move to digital payment channels like online banking, mobile banking, etc., etc. It is also asking customers to reduce unnecessary trips to the bank to avoid large crowds so it can minimize contamination. However, banking experts still feel the bank can do much more for citizens. For instance, in Rwanda, they have, apart from just pushing people to go to use cashless money channels, they have removed service charges when transferring money from mobile money accounts to other mobile money network accounts. They've also, for instance, reduced a limit for mobile money in your phone. So this is a way to put your mouth where your money where your mouth is. But as it stands, the bank has not issued any sort of business solutions for people yet. But there's going to be a big meeting tomorrow that we expect to come out with some answers.
Well, last we heard, Tanzania's Bankers Association actually met on Wednesday. I don't know if that meeting tomorrow involves them, but they're discussing actions to be taken by lenders in the country. What came out of that meeting and what can we expect from the one tomorrow?
Well, Uche, the meeting was the start of, I think, many discussions within the banking sector as COVID-19 continues to hit the country. This meeting was on Wednesday, did indeed happen. It's a 44-member body, 53 banks in the country, but 44 banks are members of the Tanzania Bankers Association. So basically, they have been obviously sensitizing people to use sanitizers at all clerks in the banking hall, to make sure the sanitizer in all banking branches. Obviously, the basic do's and don'ts of Corona. They obviously don't make banking laws. That is the central bank's job. So they would basically just advise clients to do issues like, for instance, do month-end transactions ahead of time to avoid congestions. But I did speak to the chairwoman of the Tanzania's Bank Association, who said, like I told you, tomorrow there will be a bank between the Tanzania Banking Association, the Central Bank Tanzania, and the mobile network operators, who are meeting to discuss the future of the sector as COVID continues to unfold. For instance, issues like loan repayment extensions, loans that were being processed before or in the middle of coronavirus hitting. So from tomorrow, we get a clear pictures on sort of the business aspects of things, monetary policies, liquidity, and issues like that.
Now, Daniel, Tanzania currently has just about 3 cases. That's a relatively low number of cases compared to other countries in the region. But give us a sense of the impact that the virus has had on the country's economy so far, and what has the government's response been like to these rising number of cases?
Well, there have obviously been anxiety and tensions among the business community on what exactly will happen as the virus continues. But in terms of business decisions, being made, people are still hesitant and awaiting. But there are real effects of COVID-19. For instance, challenges around the movement of goods. Imports and export chains have been affected. Global logistic channels have been affected. For instance, planes and ships, stuff like that. Transit between of goods has been affected. Also, we we know that global growth rates are going down. Oil prices are going down. So obviously, as the possibility of a global recession comes, there will be less demand for what Tanzania has to export. That is something that the government is wary of. For instance, horticulture is a multi-million-dollar industry for Tanzania, and most of the flowers and the horticulture products sometimes go through Kenya. Now, imagine a farmer who was cutting a big consignment of roses to take to the Netherlands now, and with the logistical channels, in the way that they are. So business people are making millions of shillings in terms of losses. Also, tourism has hit a direct loss. It employs about 1 million people and converts about $2.3 billion for the country. Now, there have been cancellations for the sector. Tourists are not coming. In fact, the Tanzania Tourism Board had signed a deal to bring in over 10,000 Chinese nationals as part of its operation to expand into the Asian market. And now, obviously that contract is on hold. In fact, just last month, there was supposed to be 500 tourists who were supposed to be the first batch of this sort of tourism to China deal that they closed that now is in jeopardy. So definitely businesses are being hit. The government is assessing the situation. After this meeting with the central bank tomorrow and next week, we'll definitely get a clearer picture of what is happening.
Well, thank you, Daniel, for that update. That was Daniel Kijo joining us in Dar es Salaam. Let's head to Ghana now. Travel bans and increasing flight restrictions in the country due to the coronavirus pandemic are taking a toll on its aviation sector and, of course, other businesses in the country. Well, as CGTN's Nabil Ahmed Rufai reports, some travel agencies are now shutting down due to low bookings.
Sticking to self-isolation, Gideon Asari has closed his travel agency and is now working from home. The coronavirus outbreak in Ghana has been bad for business.
We serve our clients by way of booking tickets, by way of arranging tours, and we rely on the airlines, we rely on the embassies, we rely on the attraction points, and they are all closing. So technically, it's like a knockout.
Ghana has tightened travel restrictions. It has banned the entry of people from countries with over 200 cases of COVID-19. These measures have adversely affected the aviation and tourism sectors. Gideon Asari has asked all his employees to stay at home. He's not sure just how long he'll continue paying them their salaries.
All the monies we've collected, the trips were supposed to be materialized in April, and we had to postpone these trips. So how long am I going to be able to pay this staff for every month until the virus case is over?
Already, some international airlines have grounded their planes because of the coronavirus pandemic.
With flights being cancelled, Ghana's investment in the aviation industry is also being hampered. The country, which has the cheapest aviation fuel in the sub-region, is seeing a drop in the numbers of flights that refuel at the Kotoka International Airport.
The United Nations says 25 million jobs could be lost globally due to the coronavirus. Just what impact COVID-19 will have on Ghana's economy remains unclear at this stage. While some economists are predicting job losses, they say this could also be a turning point for the country in the form of increased local manufacturing.
In industry, we will have to now consider on how to produce and how to use what we produce here in Ghana. Again, we may also have to produce and eat what we make.
It's not clear when this public health crisis will be over. For Gideon Asari, self-isolation means he can spend some quality time with family. But concerns about how to make his business stay afloat still hang over his head. Nabil Ahmed Rufai, CGTN, Accra, Ghana.
Now in Egypt, airports are apparently witnessing a surge in arrivals as thousands made their way into the country to beat a ban on flights. Cairo has stopped all international flights starting Thursday, March 19th until March 31st. CGTN's Adel El Maroui has the details from Cairo.
Hours before Egypt's international flights ban gets imposed, the arrival halls at Cairo International Airport gets packed with passengers. Egypt's flight ultimatum has made many rush to get back home by all means.
I was planning on coming back around the beginning of May, back to Egypt. but I had to reschedule my flight because the borders were closing on Thursday. I was actually really concerned. I actually booked a flight through Turkish Airways, but the Turkish borders ended up closing, so I had to reschedule another flight, and I went through New York back to Cairo, yeah.
Some have spent more than 24 hours on airplanes and in connections to get here on time. With fears of COVID-19 infections growing, many took additional personal preventive measures.
The news about it has messed up my trip. Luckily for me is that Egypt and Niger were both shutting down on Thursday, just a day after I left. I was taking extreme care during my transits. For 12 hours, I have not eaten or drunk anything. I had my gloves on and I've just taken them off now. I don't want to harm my family.
Egyptian airports will not be open to international flights for nearly 2 weeks. Tourists currently on holiday in the country will be permitted to leave during the lockdown, while domestic flights will resume normally. For a country that relies greatly on tourism, shutting down international flights is definitely Egypt's last resort. The country wants to diminish the spread of the virus by all means so that its tourism industry can recover quickly. Adel Mahroui, CGTN, Cairo.
Well, let's head to Nigeria now. The country is planning to cut down its proposed budget by an estimated $4.9 billion following a sharp drop of global oil prices. Now, the spending plan was calculated assuming crude production of 2.18 million barrels a day at a price of $57 per barrel. With the government's heavy reliance on oil revenues, the drop in prices and a price war between Saudi Arabia and Russia has now taken a toll on the country's foreign exchange reserves. International benchmark Brent crude reached a 16-year low of about $25 per barrel. This was dragged down by concerns over the impact of the coronavirus, a collapse in oil demand, as well as a supply glut in the market. Now, Nigeria is still struggling to recover from a recession in 2016 that was caused by the drop in oil prices back in 2014. Meanwhile, Nigeria is also hosting its first international conference on commodities markets at the country's capital city of Abuja. The focus is to develop a vibrant commodities trading ecosystem. This is coming as part of the government's efforts to diversify its economy from oil to the non-oil sector, to sectors such as agriculture and production. The focus is to develop a vibrant commodities trading ecosystem in Nigeria. Here's CGTN's Kelechi Emekalam with the details.
Of this two-day conference. In a few minutes, we'll be taking a
participants drawn from professional, regulatory, investments, academic, developmental, and industrial communities. They're all gathered to rub minds on unfolding threats to Nigeria's fragile economy. Crude oil prices have fallen far below the country's benchmarked $57 per barrel. Nigeria's plans to quickly ramp up production is hobbled by infrastructure, operational and regulatory problems. This think tank is trying to change that.
We believe that if we can develop and institutionalize a vibrant commodities trading ecosystem in Nigeria, we can substantially address problems of lack of storage, poor pricing, non-standardization, as well as low foreign exchange earnings affecting our agriculture and other commodities subsectors.
Nigeria is well endowed with agricultural, metal and energy resources, but these potentials are yet to be fully realized. While non-oil GDP growth has shown signs of improvement in recent years, more than 80% of Nigeria's foreign exchange revenues still come from oil exports.
The agricultural sector employs about 40% of our labor force and accounts for 22% of the country's gross domestic product. This is at the end of 2019. In the last 5 years, the sector has recorded positive growth rates higher than that of the entire economy, and even positive in 2016 when the entire economy went into recession. The mining and quarrying sector, dominated by oil and gas, is also a major component of our output, accounting for 9% of the GDP. The sector is responsible for the bulk of Nigeria's foreign exchange and government earnings, and that is the reason why when there is any shock within that sector, it affects the whole of the economy.
Parliament is meant to back up plans that will encourage a major shift to non-oil sectors.
The Senate will ensure that necessary legislation by way of bills and enabling laws are enacted towards making farmers have easy access to credit facility so that they can upscale their farming activities, thereby enhancing commodities trading. There's also the need to increase public awareness and education for the commodities market.
Institutionalizing a vibrant trading ecosystem is something Nigeria strongly requires, especially at this critical time when the nation could be facing an economic downturn. Scaling up earning efforts in non-oil sectors would yield greater prosperity for the national economy. Kelechi Amekalam, CGTN Abuja, Nigeria.
You are watching Global Business Africa. Let's take a short break now, but still coming up on the show. Asian markets remain in the red as the impact of COVID-19 continues. And Europe's chief Brexit negotiator, Michel Barnier, tests positive for coronavirus.
No one again, he can hold in guns. Machine guns from police forces toward the protesters.
Were you worried about your life at that particular time?
Not at all.
The activity, thank you very much for your time. What is your assessment of the state of the continent today?
Africa has the potential to power itself.
Excuse me.
How will your world change today? What happens here? What happens there? Or what you make happen for yourself? If it matters to you, it matters to us too. Your stories are these stories that need to be told. Africa Live. Find your voice.
Welcome back. Well, let's move on now to international markets. Equities in the Asian market have traded in the red today. The region's shares initially rose after the European Central Bank said it will launch a $750 billion pandemic emergency purchase program. But they soon tumbled as investors worried about the spread of the coronavirus. Now, Japan's Nikkei dropped more than 1% as companies such as Tokyo Electric Power and SoftBank Group dragged down the index. The Shanghai Composite was slightly down, while Hong Kong's Hang Seng Index fell 2.6% on the day. The Korean Kospi dropped more than 8% despite Seoul's announcement of a $39 billion aid package. Meanwhile, markets in the Philippines rode a roller coaster today. The country's benchmark index plunged almost 25% after reopening following a 2-day suspension. It later bounced back to sit at about 13% down. Meanwhile, Europe's chief Brexit negotiator, Michel Barnier, has confirmed he has tested positive for the coronavirus. Through a video posted on his Twitter account, he adds that he is strictly confined to his home and urges those affected or isolated to follow the prevention measures. The revelation comes after the EU and Britain cancelled this week's post-Brexit trade talks due to that outbreak. Britain left the European Union on January 31st, but both sides agreed a transition until the end of 2020 to allow them to negotiate a new partnership. Meanwhile, the Chinese government has set its measures aimed at alleviating the impact of the coronavirus on trade companies, as well as inbound investments and the value chain. The spread has affected production, consumption and trade and will likely exert more downward pressure on the global economy. Now, global orders and demand could be on the decline as the pandemic continues to shrink inbound investments due to the drop in total cross-border investments. According to the United Nations Conference on Trade and Development, global cross-border investments will decline by 5% if the world can control the virus in the first half of the year. But if it lasts the entire year, it could drop by 15%. And U.S. stock futures are seesawing, pointing to a slightly lower open. That's after Wednesday's sell-off. Xia Cheng walks us through how far the U.S. markets have tanked and how much a downside could be left.
Will the market sell-off continue on Thursday? By Wednesday, the Dow has wiped off almost all of its gains since U.S. President Donald Trump took office in 2017. But bear in mind, the Dow remains up almost 9% from when Trump unexpectedly won the presidential election in 2016, often referred to as the Trump bump. For a bear, you might say that's 9% of room to fall. 1/3 of the S&P 500's market cap is gone since the record closing high on February 19th, the peak of Wall Street's longest ever bull run. The emergency trading halt has been triggered 4 times in 8 sessions. Investors don't seem convinced by the dramatic stimulus measures. They are factoring in a global recession and worrying that the economic gloom could extend into the summer. As for the U.S., the Fed has used up its cards and is not willing to go negative on rates. So the U.S. will hold on to targeted fiscal stimulus to save the market and the economy. But the U.S. supply chain is more downstream, and a lot of their upstream suppliers are in China, meaning if Chinese manufacturers continue to report earnings warnings, U.S. stocks might continue to be pressured. And some analysts are looking at 2,350 points for the S&P as a psychological mark. U.S.-listed Chinese companies are part of the collateral damage. Some have crashed by more than 10%, but analysts note that these companies' revenues are mainly from China, not the U.S. As China stabilizes from the coronavirus pandemic, it could provide some support for these U.S.-listed Chinese tech firms. Xia Cheng, CGTN, Beijing.
Now, in Australia, the Reserve Bank is taking unprecedented measures to try and lessen the economic shock from the coronavirus. The RBA cut the country's interest rates for the second time this month and has now launched a measure that it's never used before in order to encourage spending in the country. CGTN's Greg Navarro explains.
After the Reserve Bank of Australia announced an emergency cut to the nation's interest rate, now down to a new historic low of 0.25%, it went a step further. The RBA will begin what's called quantitative easing to help offset the expected shock to the country's economy.
We are expecting a major hit to economic activity and incomes in Australia that will last for a number of months. We're also expecting significant job losses.
Quantitative easing is the practice of buying bonds from banks and other private institutions to essentially put money back into the economy. The U.S. Federal Reserve recently signaled it was adopting the same policy, and New Zealand's central bank may soon follow.
It's certainly another form of trying to get more spending in the economy by more borrowing, but instead of just lowering the short-term interest rates that households face, it's lowering the interest rates that the government faces. So the key player in all of this must be the government in terms of its willingness to borrow.
Earlier this month, Australian Prime Minister Scott Morrison announced a more than 17 billion Australian dollar stimulus package.
To support cash flow, boost investment and provide immediate demand stimulus to the Australian economy.
And the government is reportedly preparing to unveil a second stimulus package, this one aimed at helping industries hit hard by the spread of the virus.
I think the most important thing is that we don't over-rely on central banks, because it's really the fiscal stimulus that we need now in Australia and globally.
Australia has enjoyed almost 3 decades of uninterrupted economic growth, even during the global financial crisis. But late last year, the country's economy began showing signs of slowing, along with low wage growth and increasing personal debt. Experts say one of the biggest dangers to Australia's economy out of all of this is if businesses and families start defaulting on their loans.
Good bank management dictates that you hold a certain amount of provisions for potential defaults. The problem is that defaults have been falling, so provisions have been falling, and we're going to be caught by surprise here.
I think that lowering the cash rate to the effective zero rate is what we need at this point in time. Growth's running below trend, it's going to fall, it's going to slow significantly in the face of this negative shock.
And global growth is slowing, raising the possibility that Australia could experience its first recession since the early 1990s. Greg Navarro, CGTN, Sydney.
Let's move on now to energy markets. Oil prices rose nearly 10% today. That's after a 3-day sell-off drove prices to their lowest levels in almost 2 decades. But analysts are saying that gains were likely to be temporary on tumbling demand and, of course, weak prices. Here's CGTN's Hendrik Siebrandi reporting from the U.S. state of Colorado.
Bernadette Johnson is a VP at Enverus, a Colorado company that does data analysis for energy providers. In an office that's been emptied of employees due to the coronavirus outbreak, Johnson is keeping tabs on another big shock. This one involves oil.
It's hitting everybody. We're being squeezed from both sides. Demand comes down, that means price drops. Supply is also going up.
When COVID-19 exploded in China in January, manufacturing activity there plunged, as did vehicle and airline traffic, cutting oil demand, a trend that, along with the virus, has now swept the world. Then earlier this month, an agreement by Saudi Arabia and Russia to prop up oil prices by limiting production blew up.
Russia just said unilaterally, we're not going to listen to you. So then Saudi Arabia decided that to punish, in one sense, punish Russia. So they decided we're going to play a game of chicken and we're going to pump even more.
With supply and demand going in completely different directions,
prices have crashed. Oil company stocks are crashing.
Crude oil that sold for $60+ a barrel when the year started is now in the high 20s, and some experts say headed even lower. Some are calling it the most destructive oil price crash in history.
Oil and gas producers are pulling back. They're laying down rigs, they're laying down frac crews, they're holding wells that they were going to bring online until later in the year, hopefully when prices recover.
It's hitting all segments of the industry in states like Colorado, which rely heavily on jobs generated by the energy sector, from oil field service workers down to welders, electricians, and plumbers.
Have we heard of a few new layoffs? We have in the past 10 days or so. Is there certainly the fear that you're going to see more of that? I think it's pretty likely.
As a result, U.S. counties in the oil and gas patch are also likely to collect far fewer taxes.
That county depends on that revenue, right? And so there's a multiplier effect in that county when workers get laid off.
Johnson says while larger oil and gas companies with cash reserves and not overburdened by debt can better weather this storm, many smaller outfits could be in trouble. And all the uncertainty surrounding the pandemic, she adds, makes matters worse.
If we knew it was 2 months for sure, the industry and the market can react to that. But I think the bigger challenge is we just don't know how long it's going to last, and it makes it really hard to plan.
With no agreement to cut production on the horizon, she expects the glut of oil fueled by the pandemic to persist through the summer. A gift for drivers, no doubt. A real concern for those who depend on energy to make a living.
I mean, it's supply and it's demand. Everybody's getting squeezed in the middle.
Hendrik Siebrandi, CGTN, Denver.
Now, while the coronavirus epidemic has gradually come under control in China, restaurants in Shanghai have been busy trying to recover from weeks of lost revenue. Chefs there are now live streaming, hoping to attract some social media attention and some customers. Will it work? Well, CGTN's Chen Tong is on that story.
这个是澳洲谷物饲养300天。
This steakhouse in downtown Shanghai has been turned into a live streaming studio. The broadcaster, who is the restaurant manager, had no previous live streaming experience at all. But zero sales for weeks forced him to learn. He opened accounts on social media apps 2 weeks ago, teaching some cooking tips. hoping the strategy could attract consumers come to dine in, or at least buy steaks to take home.
这次疫情的话，打击是100%的事。
The epidemic definitely hit us. Our bookings always used to be full, but now they are about zero every day. We had ingredients worth 200,000 yuan ready, but more than 100,000 yuan of that has just been wasted. Some of my friends have started to follow my social media account and bought some of my steaks, but that isn't much help for now. This is only a gradual thing.
持续性的去积累，不可能马上有一个质的变化。
The live streaming thing did help, but the help was limited. In the past, the steakhouse was taking in 30,000 yuan a day. But now, with 80% of its revenue coming from its delivery services promoted by the social media broadcast, average daily revenue is only a few thousand yuan. Dining was hit very hard by the epidemic over the past month. Live streamings and the delivery services tried to help out. But the question is how effective the strategy would be in the longer term. Taobao data show that nearly 160,000 food shops and restaurants have opened online stores or delivery services in the past month. And their live streams on Taobao have jumped by almost 120% year on year. But industry insiders are skeptical about how well this can all work in the long run. Alex Young from research firm NPD says the restaurant battleground is still offline, especially for high-end diners.
For the restaurants, actually, it's more rely on their products, their service, and their reputations. Marketing activities can drive short-term consumption, but cannot drive long time. And especially for the steak house, because they cannot carry out, they cannot deliver, they can only dine in. All their revenue depends on the dine-in consumptions.
And when dine-in services will return to normal still remains very much a question mark. Though there are many restaurants in town that have resumed business, the customer flow to brick-and-mortar establishments is still limited.
For some kinds of the channels, they require much faster. Just like the Chinese quick service restaurant, the Western quick service restaurants, coffee shops, drink stations. We already see they are recovered maybe 90 to 80%. But for the food service restaurants, because government still restrict the in-store traffic to avoid too many people sitting together. So that takes time.
NPD data show that around 60% of the restaurants in the 22 core cities that it tracks nationwide had resumed business as of last week. The estimate for this week's end is that 90% of the restaurants will be open and hoping to draw back their old customers. Chen Tong, ICS for CGTN, Shanghai.
Well, now here's a quick look at how commodities performed today. Benchmark Brent crude, which of course has lost half of its value in less than 2 weeks, was up over 2% today as oil prices climbed. But of course, as we mentioned earlier, analysts say that those gains are likely to be temporary, as of course the markets continue to tumble. Looking at agricultural commodities, coffee prices climbing a whopping 8% today. That's of course as supply chains continue to be disrupted by the coronavirus epidemic. Gold prices falling in volatile trading today as investors seek to hoard cash in unstable market conditions. Platinum down almost 5% today, falling for a 7th consecutive session. Well, let's take a short break now, still to come. Nigeria's filmmakers seek global partnerships to invigorate its industry. And heading to Nigeria now, the country's film industry is looking to expand its horizons by collaborating with other large film markets in India and the United States. Now, filmmakers and distributors are keen to expand their reach to a bigger global audience while creating more lucrative opportunities for filmmakers at home. Here's CGTN's Phil Ihaza reporting from Abuja.
I'm Mabel King.
Nigeria's Nollywood industry has produced movies that have grossed over $1 million. But that's small compared to other industries like Hollywood, where one movie can make more than $2 billion. Nollywood filmmakers are now looking to collaborate with the likes of Hollywood and Bollywood to produce movies that can have a wider reach and gross more in earnings.
One of the advantages of foreign partnership is that it gives you new audiences. When the film comes out, the Frenchman will want to watch the film. Not necessarily because it's a fantastic film from Nigeria, but he want to watch it because there is somebody who is from his locality there who is in that film. So naturally, he wants to see that film. Action!
According to UNESCO, Nigeria's Nollywood produces an average of 1,500 movies per year, making it the second most prolific industry in the world after Bollywood. But many of the Nigerian-produced movies are not internationally recognized. Experts say with more financial assistance from government and private bodies, filmmakers can create higher quality films that can compete in global stages, like winning its first ever Oscars.
Our financing is very, very poor. You know, we only finance films either getting money from the bank, Bank of Industry, CBN, or you get from friends and family. But these monies now are monies that are being given for you to pay back with interest. There should be a special fund where people who have these kind of stories could access and make films that could represent the country in the Oscars.
Will you marry me? The government has ordered the release of about $20 million to creative industries, including its film sector.
Filmmakers say Nigeria could take advantage of its huge population with 500 languages and 250 tribes to tap into unique and diverse stories. They say with more collaboration and investment coming into the sector, the industry could grow by leaps and bounds. Phil Ihaza, CGTN, Abuja.
Well, before we go, let's check in on Africa's currencies today. South Africa's rand weakening today. That's right after the South African Reserve Bank cut the repo rate by 100 basis points. There, of course, are still huge concerns about the effect of the coronavirus on economic growth. And that, of course, is impacting the currency. Meanwhile, Kenya's shilling also weakening to its lowest level in nearly 4.5 years. That's mainly due to concerns about the potential drop of hard currency inflows, of course, caused by the coronavirus outbreak. Meanwhile, Nigeria's Naira, it has been easing on the over-the-counter market on the back of fears of a possible devaluation in the wake of an oil price collapse that, of course, has now worsened dollar shortages in the country. On the black market, the Naira traded at $3.75 per dollar, while it steadied at around $3.07 per dollar on the official market, of course, supported by the country's central bank. Well, that's it for this edition of Global Business Africa. Remember, you can send your feedback to the contacts on your screen. You can also follow us on our various digital media platforms. From me, Uche Okoronkwo, and the rest of the team, thanks for watching.